What's up, YouTube? This is Thomas from Tysonfoods and thank you for watching. Today I want to talk about Tyson Foods. On the 8th of August they are going to announce their quarterly results, and in this video I will tell you more about what Tyson Foods does, take a quick peek in the 10K file, discuss the quarterly results, do a fundamental analysis, and in the last part I will give you 3 stock price targets for Tyson Foods. So make sure to watch until the end. If you're new to the channel, make sure to subscribe to get notified when I'm posting a video. I also appreciate an early thumbs up, which helps me within the YouTube algorithm. For now, let's dive into it. Tyson Foods is a modern, multinational, protein-focused food company, producing 20% of the beef, pork and chicken in the United States, in addition to a portfolio of foods under the Tysons, Jimmy Dean, Hillshire Farm, BallPark, Wright, Aidell and State Fair brands. Tyson Foods is also the leading protein provider to many national restaurant chains, including quick service, casual mid-scale and fine dining restaurants. We make great food for a variety of food service customers, including schools, military bases, hospitals, nursing homes and international customers as well. We are also the only company that sells chicken, beef, pork and prepared foods through all major retail distribution channels, including club stores, grocery stores and discount stores. In the 10K file from Tyson Foods you can find a lot of information about the revenue breakdown. They have 5 revenue segments: beef, pork, chicken, prepared food and international other. In this chart we see the revenue of the first quarter. 2020 is the blue one and 21 is the red one. Everything is increasing, so that's the good part. But in this chart we see that beef, which generate 35% of the revenue and have the highest margin of 11%, isn't growing a lot, just 2% versus last year. Pork did grow the most with 17% versus last year, but pork also have a lower margin, just 5%. Prepared food, which has a margin of 10%, grew 5% versus last year, which is around the average of all the segments together. Tyson Foods have 4 types of customers, according to their 10K file. Retail representing 47% of its revenue, food service representing 28% of its revenue, international representing 14% of its revenue, and industrial other representing 11% of its revenue. We see that in this chart, first quarter 2021 versus 2020, the retail grew the most with 5%. This is also the biggest segments with 47% of the total revenue. So this makes me feel comfortable. Food service, which represents the second largest segment with 28%, just grew 2% versus last year. Many of these growth numbers are related to the impact of the ronirovirus, so it's hard to make assumptions right now. If we take a look at the quarterly results in history, we see that they don't always beat the expectations. This might be something that can be a negative thing, because investors do react on these things, and it might be a negative one. Next up is the fundamental analysis. I will show you different insights that I find very important. Please keep in mind that this fundamental analysis tells a story and not a buy or sell alert. Tyson Foods has a PE ratio of 12, which is below 20, so it's a check mark. The PE ratio tells me immediately that Tyson Foods might be undervalued. Tyson Foods has a profit margin of 5%. This is of course a red X because it's below 10%, but keep in mind that the whole food sector has a lower profit margin, so I don't bother that much. But I do think that some product segments should have a higher margin, as I said before. Since 2016 the revenue is up 17%, so this is of course a check. In the 10K file they claim to produce 20% of the beef, pork and chicken in the United States, so there's plenty of room to grow for Tyson Foods. Since 2016 the profit is up 12%, so again a check mark. Keep in mind that profit growth has a lower growth rate number than the revenue, so margins are a bit lower right now than they were before. Return on assets was never above 10% in the past 5 years, so it's a red X. The return on investment started very high in 2016 but has come down in the past years. This might be something to be worrying about. You don't want this number to go down any further. Tyson Foods is buying back shares, so it's a check mark again. I think this is one of the more important metrics. With buying back shares you create value for the investor because they will own more of the company in ratio. Another thing that I like is that Tyson Foods has less shares to pay dividends to. With the current ratio you want to check if the company is capable of paying their current liabilities with the current assets. You want this number sitting at 2, where 1.5 is the absolute minimum. Tyson Foods has a current ratio of 1.47, so it's a check mark. I think this is very nice for this type of company. Since 2016 the free cash flow is up 33%, so this is a big jump. But please notice that it has a downtrend since 2016 and that only 2020 is up versus 2016. So this might be related to the Roni virus. You have to make assumptions about the next few years. Can they continue to grow as they did in 2020, for example? As always, I will give you 3 stock price targets with different multiples. A low multiple of 15 for slow growing companies, a mid multiple of 20 for average growing companies, and a high multiple of 25 for fast growing companies. We see that even with a low multiple, Tyson Foods might be undervalued based on the free cash flow. To be honest, I think it's very hard to choose a multiple, because they do have growth in the free cash flow, but I feel that it's related to the Roni virus, because we saw a downtrend in the past few years with the free cash flow. So I decided to stick with the mid multiple because they do have a decent growth in revenue, profit, free cash flow, and they do buy back shares. This means Tyson Foods is undervalued by 43% right now, and they do have a fair value of $102. This means a check mark. I think Tyson Foods is a wonderful company, a simple business that has a lot of growth potential. I do worry a little bit about the lower profit margin of some product segments, but the biggest product segments has also the highest margin. They do have a lot of important checkmarks and show that they can grow in the past years. Another thing that I like about this company are the dividends. They pay a quarterly dividend of 2.5% yield, with a payout ratio of just 29%. The 5-year growth rate is at 26%, and they did increase the dividend for 9 years in a row. This is a very strong dividend scorecard, and it shows that Tyson Foods is capable of being a strong dividend play. For now, Tyson Foods is a buy for me. I currently don't own any shares of Tyson Foods, but I will add them to my buy list. But please remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.